Hello and welcome to another episode of Casual Friday. I'm here with the Duck. As always, we are brought to you by Woo. Their Q4 update, we've linked in the description below. Be sure to check that out. And Don, I want to start with the elephant in the room. And it's not to do with you rage quitting Twitter. We'll get to that. But I'm actually using a dark TradingView theme for this video.
No,
So it
no, no,
seems like I'm
no.
slowly being morally corrupted, right? So I've started opening the Casual Friday links all in one using the, wizardry to get all the tabs. And now it's the TradingView dark theme to get likes and comments and feedback. So I don't know. I wouldn't trust me if I were you. I'm clearly very susceptible to sufficient public pressure.
You're gonna get public pressure now from the other people that are like, why the fuck are you using dark theme?
Well, maybe this is some 4D chess, right? They don't know how good they have it until it's gone. So we'll see a full reversal and the light mode silent majority come out and protest. That would be nice.
I'm pretty sure most people actually prefer light mode, but I'm curious. We'll see. We'll see in the comments.
The
Basically,
demons of the night are always louder, Don. That's the issue.
that is true.
I do think there's something like diagnostically wrong with you if light mode hurts you so much that you have to leave a comment on a video. Like that, I don't know what has to happen to reach that threshold, but if it's like so visually offensive, I don't know what the rest of your day looks like.
I mean, pretty dark. This is what I'm guessing.
Speaking of pretty dark, you rage quit Twitter recently. Had a bit of a fit, hissy fit. This is the uncharitable interpretation, obviously. So just to steelman that part of the argument, right? It looks something like this. You're a big Twitter influencer. Twitter helps you directly and indirectly. You know, you've made friends off of there, even co-hosts in some cases. You have a sponsored show that puts some amount of money in your pocket. You've used it to sentiment farm and follow news and whatever else. And then, the moment you get some comments that aren't to your liking, so to say, you immediately just sort of pack up shop and leave. Is that at all fair? What is it about the Twitter experience that made you angry? Well, I don't know if it was anger. I think it's just like a cumulative being pissed off. But you can see from an outsider point of view, it's like, typical big account whining about nothing while ignoring all the privileges that come with being a big account. Is there any truth to that perspective?
I mean, the people that think there's actual privileges to it just see it from the lens of, okay, this guy's getting deal flow, this guy's getting pre-sales, whatever the fuck. I don't get any of that. So the privileges that I get is dealing with mentally ill people all day. And I mean, at least in Germany, that's a paid profession if you deal with that. And new friends, like for me anyway, and I mean, this might sound a little bit cynical or whatever, but I'm not going to find new friends on Twitter. It just doesn't seem likely, given how I interact on there. Like it's
What do you mean, Don? You're so agreeable and not antagonistic whatsoever.
Yes, I mean I'm not really in like in search of new friends on like in crypto as like a whole. I've got enough, and that is just you, basically.
Listen,
Nah,
to be clear, I'm your co-host first, and then whatever's left after that. Which is funny. I had people asking, "Oh, what's Don doing about his position, whatever else?" I'm like, you like me, are gonna have to wait until Casual Friday to find out which are our contractual speaking hours. So I'm just as much in the dark as you are, which we'll talk about for sure.
yes, but no, I'm just tired of it. Like
What is
I've
it specifically?
noticed.
Is it a certain type of comment? Is it a certain
No,
type of person? Is it
it's
a
just
certain tweet?
negativity in generally.
Right.
Like I think like in general, like when I look on Twitter, especially now with also the whole Palestine Israel thing, like I go on Twitter and I see dead people, and then I go into my comments and I see people that got liquidated being angry, and it's just kind of it's enough. Like I go on Twitter usually to have fun, right? And if all I get is basically like I stand up from the desk and I'm in a bad mood, then that doesn't really make sense. It's not like in my eyes anyway. It's not like I'm getting any real compensation for the work I do on Twitter. It's not like I mean I wouldn't want to, but in general, like if it's mainly like the negative feeling that I go out with, I just don't want to do it. Especially, and there's something that pisses me off, like even more so than like the negativity when you like when you start like or even dare to complain, people are like, why do you even care? Like just ignore them. Which yeah, nice message and all, right? But it gets so tiresome because you're
Calm
like,
down,
hey,
babe. you know.
yeah, it's like like how are you helping with this kind of comment, right? You're just like adding fuel to the fire because I'm like, dude, let me be pissed off if I want to be pissed off, right? Um and it's not going to change anything. So yeah, I don't know. I was just like, I'm tired of it, and we'll see if it's going to be permanent or just like for like a month or two. I don't know, but for now, like the last few days, I've been actually noticing that it's just nicer not having Twitter in my day-to-day routine. It's not like I need it anyway.
Yeah, but it seems the solution to the asymmetrical payoff structure, if you will, where you get all the negativity and none of the upside, is to just start shilling pre-sales.
Oh yeah, but everyone's so poor now that doesn't even pay anymore.
That's true. That's actually very true. I was looking recently of some of the accounts, if you will, still participating in that type of thing, and even looking at the 24-hour volume and the market cap of some of these coins, which they're spamming incessantly on a daily basis. I'm like, even if this works out, you're not going to make anything worthwhile. You know, like it's so desperate now that even scammy type behavior, just if you do the back of the napkin maths, it doesn't pay. And that raises a different conundrum that you're taking on all this legal risk, reputational risk, etc. At least if you're doing it in the bull market, you're almost guaranteed money, right? Whereas if you're doing it now, that is far less clear to me what the upside is. I guess maybe just practicing, getting your reps in for the bull market.
No, I
fine.
think they need it desperately. That's what I think.
That's also true. Or would be a reasonable supposition. See, my Twitter experience is very different. I think if I had to speculate as to why yours is kind of shitty, it's because when you bull post and bear post, you sort of you play a character to some extent, right? You sort of exaggerate and use hyperbole. And there's a large contingent of people who can't separate the sarcasm and irony from your actual underlying view. And they don't watch the show either, so they can't get that sense of nuance that I pry out of you. So that that basically evokes strong feelings. And I think in general, posting directional market commentary stuff attracts a certain disagreeable, emotional, inexperienced type of person more than other types of content. And then if they stick around and, the way they respond to these things just isn't particularly great. Like my Twitter experience, I don't tweet particularly frequently, but I generally have a good time. Also, the way I like to do it is once I tweet something, I actually mute notifications immediately. So I will keep them open for like 5 seconds to hide all those have you seen this DeFi thing?
Yes.
Bots, which Elon's done a fantastic job of cleaning up. And then I'll just actually mute the conversation and mute notifications. And actually on my phone and computer, I've always got notifications muted for everything. Nothing ever comes up. And so then if I want to revisit the tweet in an hour, 2, 3, 5, to see if there's any interesting back and forth or if any of my friends or peers have commented, I do that. But that seems to me to be a pretty good solution. But I really think the core of it is the fact that I avoid more often than not like explicit market commentary, trade, long, short, baiting one other side. That just seems to bring forward like a disproportionately dislikable type of Twitter participant. Do you think that has anything to do with it?
I mean, yeah, I think so, yes. But if you have to mute something that you post, like for me, that just kind of defeats the purpose, right? Like I posted to have like a back and forth, and if the back and forth is so low IQ that I just cannot stand it, then I'm just like, why the fuck am I even doing this?
Sorry, dude, I'm more like the Pope who just comes out on the balcony and says a few things and then retreats. And
I think that's better,
that's so self-indulgent. I don't mean that.
But yeah, I just, for me, I'm just like, it's become so dumb. Like the discourse has become so dumb that I'm just like, I can feel my brain cells leaving my body. And this is coming from someone with like a 4th grade understanding of anything, right?
So real, yeah.
So I don't know like what happened. I'm guessing it's just a bunch of people lost a shitload of money and then saw the market go up afterwards and they're really upset. I don't know, but it's been something else. But at the end of the day, like the cool thing is that you don't have to do it, right?
Yes.
Like if you don't enjoy it, you don't have to do it, and that's kind of what I'm doing now.
Yeah, makes sense. Well, thanks for showing up here. Nonetheless, I'll try to be less antagonistic than your Twitter comments, but no promises on that front. So, with that said, let's click over to the dark themed chart, Don, and talk about recent developments in BTC USD.
Not great.
Not great. So, to set some context, sort of positionally, are you still in longs? Did you buy more, sell more, get rid of it? Still holding, waiting for the weekly close, something of that nature? Where are you since last week's show?
Yeah, I'm just waiting for the weekly close. I've just not really, like, the thing is, for some reason, people just seem to think like we've had major moves. We really haven't. Like, it's up and down like roughly 5% ish, and so I'm not really in a rush. But yeah, I'm just waiting for the weekly close. I want to see how that goes. If it kind of can hold 26.8, which is the support that I have, or if it cannot, and then just make decision based on that. But I'm not really in a rush. Just for like a contextual kind of thing. I mean, I was long from 16 to 30K, right? And now I bought, and I mean, this is very admittedly a really shitty buy. I bought 28. I mean, I averaged that down quite a bit, but still. And it's at 26.8 or something right now. So like, that's a tiny move compared to the move that we had before, and tiny move in the grand scheme of things. But people are so zoomed in because price action has been so shit that yeah, those kind of 5% moves is all that matters, which I don't think it's really that important whether you go 5% up or down when you have like a larger time frame kind of idea. But yeah, we'll see how that goes. Could just be me coping, being down a little bit and then being down very much later down the line. Happens from time
It
to
is
time.
quite rare to see you underwater as someone who's been speaking
Yes.
to you for since early 2017. This is sort of uncharacteristic from a trade management point of view. I don't know if that's a time based thing or more so the entry that accompanied this trade, because it was a slightly unusual entry by your parameters, right?
Yes.
Because the candle was green, not red. It's probably the simplest way I can explain
Yes.
it. So maybe it's that, but just the fact that you're underwater is a new sight. But also contextually, if we zoom out, that's a hilarious thing to say, right? Like Twitter and your comments, and even me on this show, making a big deal out of the fact that your P&L is red, as if that's some like big moment or important thing, even though in trading it's like completely normal. And I think you raise a really good point that like contextually, like if you're publicly long from 50 to 30 and take trades along the way there, it's like, okay, yeah, nice, Ducker's good at this. And then, you're underwater on a BTC buy. It's like, oh, this idiot pussy's rage quit Twitter now, he's wrecked, etc. It's like those two things following each other is always quite funny. Fine, let's go through the timeframes. Again, the usual back and forth on the monthly, but I think the way it's developing isn't particularly positive. 27.2 being that monthly lowest close. Again, there's plenty of time to rescue this thing if the bulls want to come in, 18 days. But at the moment, it looks like a continuation, not of last month, but actually the month before, where we had that breakdown month and a sort of subtle break in market structure. Last month was technically a retest month because it didn't close back above. And now this month, for the time being, has spiked previous month's high and is back below that 27.2 again. So I think a monthly close of this nature, and certainly if it starts to expand below the monthly open for what's left of the month, and that was kind of the high of the month set, that would just be a really shitty monthly view. I don't think that requires any nuance or whatever else.
Yes.
And again, the more interesting monthly levels, as always, are sort of 35 to 38. I should probably, see, the dark theme, Don, you can't have black levels, is what I've discovered. So now I need to do a bunch of artistry. 35, 38 are really interesting monthly areas. And as we've said many times before, 23 to 20 are really interesting monthly areas as well. The way I view this mid 20-ish price action is basically going to determine which one of those monthly areas gets tested first, or which is more likely to get tested. And if it continues trading this way around the mid 20s, sort of breakdown, retest, etc., my assumption would be that support is going to get tested sooner than resistance. But I'm also acutely aware that we've been here for how long now? Even if you take the ETF candle, the breakout candle from March, you have 1, 2, 3, 4, 5. We spent like half a year chopping in 20K, and I'm sure at the highs it seemed like it was going to break and go towards monthly resistance. At the lows it seemed like it was going to break and go towards monthly support, but it's done neither. It's just tortured us for 6 months. So that could continue. There's no sort of set in stone reason why this has to expand, but I guess probabilistically, if within the narrow, this 6 month range we're in, it keeps showing weakness, I'm just gonna have to skew towards support more so than resistance. But yeah, do you think there are any saving graces on the monthly as it looks right now, or is it kind of try to rescue the close because otherwise all of the structure within here looks a bit shit?
Yeah, I mean, it's not great. I think in general, it's also just not the best level. the one that we have, like the resistance at like 27 to 29 ish. It's only the only reason why we have it is because the only thing that we have on the chart, right? Like this is the only area where we could even draw anything. That's like the saving grace, but obviously the fact that it's resisting even though it's shitty is not great. Like that's something that I like to look for when you have a shitty level that does an exceptional job. That just means the market is extremely weak, and vice versa, right? When you have a really shitty support level but it does its job, then there's some underlying strength, otherwise it wouldn't have held. So it's not great, and if it closes like this, obviously not the best.
It'd be nice to get an inverse seasonality meme on this thing, right? Where September was supposed to be this really bad month and it was green, and then October's always been green and it's red.
Yep.
That would be a funny outcome to all of this. But yeah, that's the monthly. I think it's appropriate to get louder if we're trading at actual legit monthly levels. Like the closer we get to the higher type, those 35, 38, 23, 20, I think the louder you can be justifiably. But yeah, in the mid 20s, I think your views, at least on this time frame, have to be weaker than either of those alternatives. The weekly, I think, is interesting, and it's the one that you mentioned that you're watching. So presumably the reason that you're watching the weekly close is that you still have that green candle cluster as resistance or as a structure, right?
Yes.
And if we close above the lower boundary, which is 26.7, it looks rough, but that's still a reclaim of one boundary, right? It's sort of breaking the cluster bottom and potentially turning it into support on a retest on a closing basis. But I guess the counter argument to that is it's coming off the back of the other side of it acting as resistance. So if you take that entire cluster, 28, the cluster high, is pretty evidently resistance, and we'll know by the weekly close whether 26.7 is going to be cluster support. So if you're bullish, the argument is essentially, yes, we got a range high rejection, but that rejection can't even break the support within the same range, so it's not the worst sign in the world. Whereas if you're bearish, the argument is fairly self-evident, right? Like retest the extremity and reject. But it makes sense why the weekly close is important, because you get two slightly different pictures. Again, I want to be aware of the fact that this could just be sort of a version of paralysis analysis and looking at like a 2% range and being like, oh, this changes everything, the price action at midnight will determine, the next X weeks of trading. Always kind of weird tentative conclusions to come to. But essentially, if you close above 26.7, you can still make an argument that the cluster has been reclaimed, so it hasn't fallen apart completely. Whereas if it falls below 26.7, that creates a slightly different picture where you have a rejection at the cluster high and then it falls out of the cluster low. And that, I think, is sort of uniformly bearish. Is your weekly analysis along those lines? Is it particularly different?
No, it's pretty much exactly it. Yeah.
So 26.7 is the cope line, basically.
Yes. And if that is lost, it's going to be pretty hard to justify like a bullish bias. It's generally already pretty hard. The only reason why I think and I still kind of have like a feeling that this is a pretty good, I have a setup and I have a feeling that it's a pretty good area to buy. But the only reason why that is the case is because the reward is just very large. It's not necessarily because the setup is so great, which is different from how I usually buy, because what I usually do is I buy when something's when it's basically the idea, okay, if it dumps any further, we're going to zero. So might as well buy and then see how it goes. That's my usual kind of reasoning. In this case, it's basically like, okay, it looks shitty. It is kind of shitty. But if we expand through, and this is like 28K, and this is something that we've been talking about even when we were trading at 28K, right? Like that's the best resistance level on the chart. It's just like if you can break that, then you have quite a bit of upside. And that's what makes this attractive as like a trade to me. But obviously,
just breakout trade it, bro. Stop being a pussy.
Yeah, but I mean, technically, like with the breakout trading, right? Like the one thing that people don't talk about, and it's like pretty easy to kind of do in hindsight. You're like, oh yeah, this breakout stuck, so I breakout traded it. Like this is something that I see on Twitter all the time, right? People are like, oh, if this breaks out, I'm gonna be long, and then they update and it goes up, and it's like, oh yeah, I'm long. But the thing is, like, The breakout is on what time, like when is the breakout actually confirmed? Because we had a bunch of wicks above 28K, right? So you could have bought any of those wicks above 28K and been like, well, it broke out and now I'm neck deep underwater. Or you could be like, hey, on the weekly time frame, it never closed above 28K, so I never breakout traded this. But if it does at any point in time actually break out above 28K, the next weekly close is going to be at 32, right? And then your entry is technically 32K. So like figuring out whether breakout is actually real or not is much harder than people make it out to be. It's just very easy in hindsight, right? Because you can, like, if you're like, oh, if this breakouts, I will trade it, and then it breakouts and you're like, oh yeah, I traded it. I always find that interesting because
and you're never wrong either, right?
Yeah. I mean, you cannot be.
The old version of that used to be confirmation, right? It's like, I'm waiting for confirmation. If it works out, you just pretend you took it. And if it doesn't, you're like, oh, thank God, my system is so good. It did give me confirmation and the move didn't happen. So,
yep.
Or you just double LARP and like, yeah, it was a valid confirmation, but then it unconfirmed by turning into a failed breakout. So I took the other side of the trade. It's like, you're a genius. Like, the point, I agree with the point you're getting at. Breakout trading in this context, especially when you're dealing with higher time frame levels, it's basically a very delicate dance and balancing act between time frames, where if your time frame is too low, there's like a disproportionately high chance that you're the high time frame wick on what looks like a low time frame breakout. So that's the risk if your time frames are too low. But if your time frames are too high in waiting for X time frame candle close for a breakout or a breakdown trade, then by the time it actually triggers, the meat of the move is done and your entry is garbage and it might not even make sense from a risk reward point of view. So it's not this just like easy category of if it goes above, just buy it and then you make money, because there are sort of entry trigger and time frame determinations that carry their own, unique risks of either being too early and being the wick, or if you wait too little, or if you wait too long, then the trade disappears in front of you, basically. So I think that's something to consider if you're trying to build a breakout-oriented system. And obviously, market conditions apply to this as well, right? Like if you're in a particularly slow and range-bound market, you can maybe skew your timeframes up a little bit. Whereas if the asset is sort of high momentum and moving quickly, then lower timeframes will carry more signal than noise. And so it's not straightforward, I guess, is what I'm trying to get at.
Yeah. I mean, trading never really is.
I mean, if you go on Twitter, it is.
Yes.
I was thinking this earlier. I was like, when was the last time you saw someone post a losing streak on Twitter? Like straight up, just like eating shit consecutively. Because
I've seen a lot of people do this, but they don't talk about it.
Yeah, that's true. That's true. Because it's such a common occurrence, right? Like even if you have an amazing trading system that absolutely prints money, the probability of you taking 2 losses in a row is like almost certain, I guess, as far as trading goes. But you never see that on Twitter, which isn't helpful. Because then what you have is newer traders who get most of their signal, if you will, from Twitter. They'll think if they who've never seen other participants post 2 losses in a row, if they take 2 losses in a row, they'll think, oh my god, this is like an unprecedented event. It means my entire system is broken, the market's changed, the regime has changed, the alpha or the edge has decayed, and I need to change something. But 2 losses in a row is an absolute, most likely they're not an absolute nothing burger.
Oh, I mean, 5 losses in a row.
Yeah.
I mean, you can easily have any of that. It's been a while for me. But I'm working towards it.
You're working hard. So I think that makes sense. So BTC wise, nothing's really changed as far as the levels that you care about. It's still that cluster high and cluster low. Cluster high did its job. You WhatsApped me a week ago telling me to delete 28.1, 28.2. My apologies for not doing that. And now 26.7, I guess, is the final bastion for any sign of strength. So it's interesting because you mentioned the risk reward side of it and how normally the way I'd kind of try to pass it is that most of your trades are premised more on proximity to invalidation, whereas this one is more on the reward that's available if it plays out. So it's kind of different sides of the risk reward coin that you're optimizing for, if it makes sense. That said, and this is a sort of thing I was thinking about yesterday and didn't arrive at any clear conclusions. On the weekly time frame, if this fails and its arse falls out, which is a very technical term, where does it go? So what would be the magnitude of that signal of the range low failing and the weekly close being stuffed? And where would you look next?
I mean, I think 21K. Like that's the next support that I got anyway. Now there's another one at 24, 23 that you could talk about, but I'm not the biggest fan. So at that point I wouldn't do I'm buying this anywhere just because it's slow kind of play. I mean for me the brain dead buy basically is 20k. Like if it nukes, no matter what happens, I'm gonna buy 20k. If it goes to 24k, it has to get there in a specific way. I mean that I don't know yet. So like there's no level that I would blindly buy beyond like the cluster that we're in right now. Be like besides 20k. And then if we get to 24 and we start like getting like massive altcoin nukes and people getting hilariously bearish into those, and you see funding go crazy, you see people just completely abandoning hope into 24k. I could see myself buy that, but you never know that beforehand. So like blind buy level 20k, next support 24, but I'm not biggest fan of 24.
Can you imagine slow bleeding into 24 with ETH BTC mooning and alts going up and funding?
I mean, and just have to sell everything.
that would be
Pretend
quite
you
fun.
never were in crypto, never had any.
Yeah. Okay, that's helpful. I think that's really it as far as the weekly time frame goes. I guess if someone's like aligned with your technical view, simply based on proximity to invalidation, this isn't a terrible area to do business in line with that idea because they basically get to ride your weekly idea just with a much better entry than you.
Yes, I've actually been thinking about buying some more, but then I'm
Interesting.
like, I actually hate adding to losing trades. It's
Yeah,
not
yeah.
something I like to do. But given like I have much more ammo than I like that I could use, um, I've been thinking about it. In general, like when you think about like my whole thesis, right? If you remember when I bought 16k, I had a target at like what, like I think it was 60k actually. Like I bought
It was like
16k.
100K for one of the Twitter charts.
Yeah. Yeah. So it was like something like that anyway. 16k towards like 40 and then towards 100, right? Like that was the trade idea when I took it at 16k. So for the people that are like, because some people are just very confused and they don't really understand like why I'm taking trades like I'm doing right now. Technically, I'm just getting back into that trade, right? So I bought 16k, I sold 30, I rebought 27, I sold 30 something again, and now I rebought 28k, ready for the move to 40, 45. Like the same idea still applies, like the high time frame idea, and I still don't think we're gonna go below 16k, right? So my kind of grand scheme invalidation would still be like a breakdown below 20k of my general idea where this market is gonna go. So like I'm a little bit more aggressive because I do want to have a position if this goes. Because my whole thesis for the market is like a one that I think where it's actually likely to go up over the next, I don't know, next 12 months or so. But yeah, obviously didn't play out as well as I would have liked it to. We'll see if that turns around or not.
Is the classic Don talking about like 12-month time horizons and then ETH BTC is green for one day? It's like, nope, fuck this. I hate this market. Just like ignore everything I said. I mean,
Yeah,
that's
but
facetious, obviously, but you know.
obviously, like this is just basically the two different time frame traders in me, just kind of like disagreeing, but
You have two
for a
wolves
while.
inside you, Don.
Yes, exactly. Exactly. Like, I mean, if for example, I see something super bearish in the daily time frame, right, and I'm in a monthly trade, and I might actually take this signal from that, close my monthly trade, and then reopen it once the daily thing has kind of like fixed itself, and that's completely valid in my system, right? You could also do the whole I'm hedging, right? But I find that pretty cringe. Like usually when people say that they don't actually do it, and it's actually much harder to kind of juggle all of those positions. Like you have a long term position, and now you're hedging and all that kind of stuff. Just it's a headache. So unless you do the whole I'm buying spot and then hedging that, which I like to do, but then it's not something that I can do well in my jurisdiction, right? It's just pretty damn hard to trade futures. over here. So it's just like, for me, it's just closing the trade based on a lower time frame, where I would normally short, even though I like to be higher time frame bullish. I don't know if this makes any sense at all, like the way I'm
Yeah,
saying
it
it,
does. It does.
but basically, I mean, you can have low time frame views and you can have them impact at the way you trade. But then I usually gravitate, like if it takes long enough, I usually gravitate back towards my original idea that I had in the first place.
Yeah, so let's say you're bullish on the monthly, you get a bearish daily signal, you can allow the daily weakness to creep into your monthly management. But if the daily signal doesn't play out, the natural reversion is back towards the higher time frame signal.
And it can even play out, right? Like oftentimes,
Right.
and this is something that people just completely miss. Like if you're bullish on 20 in the next 24 months, right? A high time frame idea. And then you get like a very bearish signal because let's say this Bitcoin goes from 16K to 60K in 3 months, right? And it's at resistance, it's way too high. For where it should be, and you're like, this could even retrace like 50%, but I'm still bullish. But you can still obviously kind of protect yourself from the downside by taking some profit on that way. Just kind of makes sense. Like that's just you not being stupid, even though you have a higher time frame idea and higher time frame conviction. In that trend, there's obviously going to be pullbacks, and you can take advantage of them. You don't have to. I think it also makes a lot of sense to just sit through them if you have sufficiently enough bullish thesis. But yeah, you don't have to sit through it if you don't want to.
Yeah, I was going to say, it sounds like, at least in my mind, it's almost more of an advanced technique because the risk of that is that you basically involuntarily abandon your high time frame view because you're hallucinating low time frame signals.
Yes.
So there's a world in which
It's
if
all
you
the time,
right, it's like if there's a world in which if you just stuck to your high time frame view, you would have been correct. But then you're mismatching time frames and you're taking all these lower time frame gyrations and oscillations as signal rather than noise. And then fast forward 3 months, if you'd done fuck all, you'd have been fine. And then instead, you've donated half your trading account to fees or whatever else. So.
Yes.
Fine, cool. Okay, so weekly close is important. Below that, 24 and 20. Above that, 28 is still an obstacle, the other side of that cluster. But the cluster breakout would probably be quite a big move. 30 plus seems like reasonable, I think. That said, the daily time frame is actually my least favorite time frame for BTC right now.
Looks like shit.
Which I don't like saying at all because this is like one of the best time frames in general. Like the monthly is amazing for levels and closes. The weekly is really good for levels and closes. The daily is probably the best all-rounder because it actually moves quickly enough for you to take candle close signals without having to wait for a whole week or a whole month. But the daily structure right now looks pretty shit, I think. From a market structure and levels point of view, I was kind of fishing last night and today trying to find if there's anything that I like as far as dip buying structures on this thing, and I really struggled. I found myself sort of going back and forth and thinking, oh, well, in the past I've paid attention to the 26.6 to 26.5-ish mini cluster. Maybe there's something there. Then I looked back to the former range high at 26.4 and thought maybe that's a level. But then whenever I find myself sort of scrambling and reaching for levels, it's quite rare that those are actually any good. And that's almost a symptom in itself that the market is not in a good area if I have to look really hard. I think the best argument that bulls had was the daily cluster, which is probably ubiquitous on this channel at this point. Between 26.9 and 27.2 or 27.4. Yeah, 27.4. And that looks bad now. Because we consolidated at the cluster high for like a week. And then we broke down not only below the top of that cluster, but also closed through it, to the downside. And if anything, today looks like a retest of that same structure. And so you essentially have two things where the daily cluster's been lost and looks like it's resistance. And then if you look to the left, down and to the left in terms of what's a good daily support to sort of mitigate this, I'm personally a bit lost on that point. So could you give us some hope, please?
I can actually not. Like, it's just shit. Especially given that the S&P's been doing all right. Like the S&P's been up and Bitcoin's been down. There's been some... in general, like crypto specific weakness, what we like, it's just something you don't like to see if you're bullish. It's something that you very much like to see if you're bearish. So no, I don't really have anything. Like if it comes back above 27.5, starts looking excellent, like really, really good. And this is actually like one which is quite nice for a breakout trade, I think, because in that instance you have a little bit of time, like because it's a daily level, right? So like if it comes back above 27.5, closes above there, maybe it closes at 28k, but then you get a really nice breakout trade to like much higher levels. But unless it does that, it just looks like shit. So I like the bearish setup on the daily much better than the bullish one. So that's not great. It's the only argument that bulls really have is that weekly support is pretty damn close. And then obviously if you zoom out like very far on the weekly time frame, technically we had like just a move up and now we're moving sideways, so you would expect more upside, but that's all that you have, which is pretty shitty. I do kind of like I do see the bearish side. Like I said, even before this move went down, I was like, I can see both arguments. I can still very much see both arguments, and I think the bullish argument has become like much weaker in the last 4, 5, 6 days, given the crypto specific weakness that we've had.
So we need some weekend price action to bail you out, Don. That seems
Yes.
to be the conclusion. I've always liked that meme where it's like weekend price action doesn't matter, it's a meme. You know that guy doesn't know which button to press because there's a contradiction, and it's like on the left button is weekend price action is a meme, and on the right is the weekly close is important. And it's sometimes difficult to reconcile those two, but such is the nature of deferring to higher time frame closes. I don't think I've got anything else to add on the BTC front. I sort of looked at the 4 hour yesterday and closed it very quickly because that also looks pretty bad. And I think it suffers from the same symptoms as the daily time frame, namely that the range was so ugly and malformed that if you're looking for clear sort of 4 hour support levels, or it's back inside this range, but there's a nice level here, I think you're going to be left wanting because it's not particularly clean. If there were a gun to my head, God forbid, why is there a gun to my head talking about technical analysis? It seems a bit excessive. But if that were the case, then maybe 25.6, where the sort of failed breakdown took place and we never fully sort of retested that level. That would be, at least in terms of proximity to invalidation, that's a level. But that's already a reach, and it's one of those do or die last chance intraday ideas, if anything.
Yeah, I mean, that'd be interesting for like a wick or something, but if you close back down there, I mean,
yeah, all the timeframes would be cooked at that point, right? The monthly, the weekly, the daily, all of those. So that's like a day trade proximity to invalidation punt at best, and just getting down there wouldn't be enough to make the higher timeframes look at all manageable.
It's not great.
It's not. So we'll see how we'll see how that ages. I'm quite like the way I sort of viewed this weekly range. Bigger picture between 30k and 26k. I think in general, it's a sign of a weak market if it gets rejected at the range midpoint like this. Especially given we had a decent enough setup at the range low, right? We had 4 weeks of that, those higher lows being built up. We spiked them and closed back inside the range. That's a pretty decent failed breakdown signal, right? Like that's something at least on the weekly. And if the most that could achieve is just a range midpoint rejection, that's not great. Because if it floats back to the range low at 26k, well then the question is, A, we've already had the failed breakdown there, so all the stuff that should have been bullish has already taken place. And B, it's if that were such a good bullish setup, why is a midpoint rejection enough to send it all the way back down 3-4 weeks later? So those are my weekly concerns. I guess it's the mirror of your bullish argument, which is that, if this weekly structure breaks, there's a lot of upside. I just think the same applies to the downside as well, right? Like if this weekly structure breaks the downside, then, I mean, God help us all. Because at that point, it starts to almost, and this is a very contrived analogy, but it almost starts to look ETH BTC-esque. Have you thought about that?
Actually true, yeah.
Right? Like ETH BTC sort of going sideways for ages and then starts like dribbling towards the range low, and you're like, oh God, I don't even want to look below me because there's all sorts of acceleration levels. I'm getting similar vibes from this BTC range as well, if it just fails, frankly. So we'll see. Daily sucks, monthly sucks, weekly is really close to really sort of proximity to invalidation is there at 26.7, but if that rolls over, then you're at least from a high time frame point of view, you're really left wanting because there's nothing left, frankly. So always darkest before the dawn. Is that what they say? Is that good cope? I don't know. But that's BTC. On the ETH front, dude, I went to sleep early yesterday, and that's because I found myself almost becoming an ETH bull. So I was like, okay, clearly there's something wrong with my already sort of low cognitive capacity, because that's a very untenable position to hold. But the reason for it was I was looking on the weekly time frame, and I have the lowest close from February, so that red candle after the rally from the lows, which comes in at around 15, 14-ish, at least on the Binance spot. I'm sure you know the weekly close I'm talking about.
Yep.
So we're sort of almost there, approaching some sort of extremity. Now, granted, it's a garbage level in the grand scheme of things. It's not 1400, it's not 1K, but it's something, right? And it helps that there's a buildup of lows just above it from sort of the last few weeks of trading. And then I looked at ETH BTC at the same time, and it's in a similar area, which is if you take the weekly lowest close within this range from the 21st of June 21, that falls at around 057, and we've already reached that. And so putting those two together, I was like, well, I think at least it's watch list worthy. If ETH BTC is reaching a local extremity and ETH USD is approaching a local extremity with lows built up into it, but without having quite tested it, if one side of the market really overexerts itself, then you might be able to dig up a confluence case of ETH BTC extreme at support plus ETH USD extreme at support. Maybe a bounce comes out of that. Do you think that's completely hallucinogenic?
No, actually, like I've been like I ETH looks like shit on the Bitcoin pair, right? Like the structure and everything, but it is, like you said, and basically the best support that the chart has. It's basically the only support that we really have. If you zoom out, like any of the other lines that you could draw, they've been chopped through, they've been shit. There's nothing, right? This is the only real support that we have. It's also the range low. So like it's interesting, and I've actually been thinking about because I thought about buying more, right? And I've been actually thinking about maybe buying ETH. But then I look at the market structure, I'm just like, fuck, can I really justify buying ETH, even though it's at support, even though it's down a shitload into this kind of market structure, and I'm still struggling with it. But I've been back and forth, just like you. Basically, I've been sitting there been wondering if I'm being an idiot not buying the most obvious level on the chart, because this has happened to me before, right? Where I'm like, this market is so shit that I love this level and I've been looking at it for so long. But the way the market reached it, I just don't like, so I'm not going to buy it. And then it bounces and I have to chase it 10% higher, which at the end of the day is not that bad. But I've been in that situation so many times, so I'm like a little bit worried. But also it just looks so fucking shit. so I'm going back and forth, and I've not come to a conclusion yet. But it's been worse. We had acceleration the last 2 weeks, right? Which is at least something. Now it's not as big as I would have liked, and I don't like that we bled into this level. But yeah, I think for the first time in a while, you can actually make a bullish ETH argument, even on the ratio. But then I also go back to the point that the entire reason why I'm expecting a Bitcoin pump, right, is because of the confluence between a Bitcoin ETF coming, which I think most people now agree that it's coming pretty soon. And two, halving. I mean, halving is a meme in my opinion, but it's a nice kind of coupled narrative, right?
Yeah, it's a 1-2 punch, right?
Yes. And you can make that into quite I think if the market does something nice, if the market behaves at least a little bit on the bullish side of things, that narrative, that 1-2 punch, like you called it, can do quite a bit of damage to bears, and in general just take the market quite high. And that is in no shape, form related to any altcoin or anything in the market beyond Bitcoin, right? So
except my altcoins, obviously.
Yeah.
Mine are the magical exception.
But that's why I'm struggling with it. I actually yesterday I was thinking like I looked at ETH/BTC and I was like, I should actually just buy this just to make sure that I'm not being an idiot. But then I was like, okay, ETF thing, I'm not going to be dumb. So
You'd be
I'm
counter trading
kinda,
yourself to some extent, or at least your
yeah,
grand thesis, right? You'd be the
yes,
architect of your own demise. Like, oh
which
no,
is
why is
struggle.
ETH/BTC up? But then you look at your order history, it's because you've been buying it all day. It's like, oh god, what am I doing?
Yeah, it's a little bit of a struggle because yeah, I do like ETH/BTC at the support, but there's too much weakness for me, especially given the grander like narrative that I'm gonna follow. So
Sure.
for me, it's a no yet for now. But if it does show, like if it comes back even above the last 2 weeks of price action, right? As in, if it comes back above 0.062,
Yeah.
I might actually just punt it. Just to make sure that I'm not being an idiot. But for now, I'll hold off.
It'd be a local market structure break of some sort. So that's, it's not nothing compared to what we've had up to this point. I would really like an ETH USD flush to accompany that. That would be really cool. Part of the reason I'm holding off at the moment, we have spiked like the deepest low that we've made on the weekly from the 11th of September. But it's, I don't know, it's just not quite there yet. I would love another push because we built up a low in that area on the 14th of August that week. And then also on the 11th of September. And now we're there again. And I've just had a lot of trades in the past where it's just been like wick, small spike, and I'm like, aha, this is the SFP deviation flush, whatever. And then you actually get the real fuck off candle that wipes all of those lows, and then it comes back up. And magically, it's at the same price where I wanted to buy it, except I've been stopped out once,
Yep.
And so I would just love for that level to get tested and get some sort of push. It doesn't look implausible at the moment. I mean, the daily did close on a spike yesterday, but it still looks kind of shit. And it might even be a sort of sneaky retest of that daily lowest close from the 11th of September at the moment. So I would welcome something a bit more volatile into 1500s, and then if I get strength, like a proper washout there, plus ETH/BTC not shitting the bed, or at least putting in what looks like a plausible wick into that range low, then you're cooking with gas at that point, right? You essentially have two extremities on the BTC and ETH pairs, and the market overexerting itself at a breakdown level and failing to continue if it resolves that way. I mean, that's interesting, at least. It's better than a year of downtrend and like zero levels on both the BTC and USD pairs. So that's potentially something to keep an eye out for. Do you have any other ETH comments, or should we move to alts and legacy memes?
No, we can move to the other memes.
The other memes. The S&P meme, that's been interesting. Again, as you mentioned, we had like 4 really good days in the S&P before the last couple of days, and crypto had none of it, as always. So,
as usual,
yeah. I think the technical roundup FUD that we had on our newsletter basically summarized our view better than we could in the live environment. That the correlation probably isn't dead. It's just dead for bulls, and less dead for bears. That. Yeah, but that still seems to be in force, frankly. And I just can't get super keen on the S&P on higher time frames, because I guess the first point is that it doesn't seem to matter what this thing does to the upside. We're immune to it. I mean, it almost made a new bloody all-time high. And we were stuck, basically. So if that's not good enough, then why would 1 or 2 green weeks, months, whatever, suddenly make a difference? And then the other point is more technical, that as far as the monthly time frame goes, this is like a retest month until proven otherwise, given how bad the monthly close was. So it's like, technically, it looks like a bearish retest. Even if it weren't a bearish retest, you'd be hard-pressed to make a case for that spilling over positively into crypto. So that's just not helpful whatsoever. Yeah. On the altcoin front, just to add some perspective, I'm going to bring up Velo real quick. So if we look at the high cap price changes over the last week, the number one performer is TRX, which is down 0.2%.
Oh, that's great.
Yeah, and everything else is down between 3 and 6% out of the high caps. And if you look at the last day, the best performers are Atom and AVAX, up less than 2%, and everything else is basically break even for the day. Maybe 1% or something like that. So I just love checking this dashboard, to make sure that I'm not getting entrenched into a lol altcoins are doing nothing bias. Now, yes, if you were to go to the mid cap and small cap and the influencer cap stuff, I mean, even there, I just clicked on small cap, for example, Don. The best performer for the day is Blur, which is up 4%. Everything else is like 0 to 3%. And this is in the small cap section. The mid caps, 2-3% is the outlier for the day, and everything else is around 0 and 1. So I do like to bias check the idea that we're not getting complacent on this show as far as lol, altcoins, whatever, we're the BTC and ETH boomer guys. But all of the available evidence just keeps reaffirming that alts suck right now. And there will come a time when that obviously changes. It's just not the case for the time being. Do you do this? Do you ever look at sort of challenge your preconceptions as far as altcoins go and think, okay, maybe there's like a bull market that I'm missing or something of that nature? And then you sort of click through the watch list and think, nope, never mind. I was right.
Yep. All the time, actually. Like I had my fun with AVAX. Like you know my chart, right? Where I always put where I put whenever alt season, whenever people kind of like start arguing with me that altcoins are bullish, right? Like bottom signal I have over the chart over and over and over again. And it was actually really interesting because we had that massive AVAX pump, right? Like a week ago. And people were like shit talking me for having that on the chart, and it's full retraced it already, which is quite aggressive. Like turn on AVAX BTC and look on the weekly time frame, and then it's actually quite wild that there's been people arguing with us for the last more than a year now that altcoins are not that great right now. Like that's been a down only chart, and that's like that's been like a so-called blue chip, right? Like people are like, this is the good stuff back last bull market. Very much doesn't look that way right now anymore.
I mean, market conditions killed altcoin Thursdays, right? Because I was like, oh, this will be a fun show to do. And I look at it every week and I'm like, oh my God, everything just looks dead and dreadful. And so I stopped doing the show. And maybe that was a signal in itself because it didn't really get that much better. And, you get the odd outlier week or day or news event. But structurally speaking, especially if you're trying to focus on the high cap liquid, so-called liquid stuff, and not the more pump and dumpy things that seem to be taking up most of the focus, there's just not a lot going on, man. I still think it's a very useful exercise to bias check in this way and make sure that complacency isn't taking over. But I don't know, man. It's not making a good case at the moment.
Especially against Bitcoin, right? Like these coins, and they don't look good against USD either. But like if they were like kind of keeping pace with Bitcoin, that'd be one thing, right? Like then I could be in the camp of, okay, the market is just generally doing poorly, so these altcoins are doing not, like it's not really their fault, because that's at the end of the day, that's how it is, right? Like when Bitcoin goes down large percent, it's not really the fault of an altcoin when it goes down with it. Just it's the market leader. It's kind of what instills confidence, right? People just lose confidence the moment Bitcoin goes down. I can totally understand that. But if you have basically Bitcoin going sideways, or even like, I mean, Bitcoin basically doubled from the lows, and then you look at the altcoin pairs on the Bitcoin pair, and they're just down 90%, and they didn't even flinch on the Bitcoin double. As in flinch to the upside, they just kept on doing their forever dumping part. Then it's really hard to kind of argue in favor of altcoins. And I think it also is just kind of the narrative right now, like we talked about earlier. Like, why would you, if you put money into crypto, why put it into altcoins that don't have a narrative and don't have kind of retail buying it right now? Like that's a pretty tough kind of thing to do. I think if anything, people from outside of crypto can be convinced to buy a Bitcoin ETF. I think that just makes sense, and they will, like if they go down the rabbit hole, like if Bitcoin does well, they will rotate back into altcoins. But for that rotation to occur, they first need to rotate into Bitcoin, in my opinion, before the altcoins get too interesting again. As in, you need Bitcoin to go up, basically. And then you can reverse a lot of these trends that we've been setting for the last few years. But until then, it's just like, who are you going to convince to buy something that's down 99% while the general crypto market doesn't do so well? I don't think you can convince anyone. But if Bitcoin's trading at 50K and it was trading at 16, then you can convince someone to buy Doge, Shiba, or whatever. Because then they're going to be like, hey, dude, Bitcoin just went up 3x. I want to have that too. And they will buy dumb shit. And then, yeah, we can have that argument again. But until then, I just don't see the point.
Yeah, I think that's fair. It's like retail. I think two things are true, which is that retail is always late, and retail always chases Bitcoin returns and tries to emulate them via altcoins, sort of implicitly or explicitly. And so for those two to come together, you kind of need Bitcoin to go up, because then in general, altcoins go up, people get interested in the space, volumes come back, marketing comes back, etc. And the FOMO created by missing the Bitcoin move is what gets people to rotate into garbage or altcoins or whatever. Like, even if you don't like Bitcoin, you don't trade it, whatever, it's almost like a necessary evil to kickstart things and to create the conditions which you enjoy as a Bitcoin hater and altcoin enjoyer. So
I mean, I think you could make the same argument for ETH, right? Like if ETH goes up, Bitcoin doesn't do anything. You could still argue that the altcoins are going to do okay. That's, I think, the one outlier case from all of it, that if ETH goes up aggressively, I could see a rotation into altcoins as well, even if Bitcoin doesn't do anything. But any other coin, pretty tough. And that'd be terrifying if ETH just went up and Bitcoin didn't do anything. That would get me scared, generally speaking.
That's what your nightmares are made of.
Yeah. And I mean, like, people are always like, oh, you're an altcoin hater. Like, I love it. Like, I love the returns that you can get in the altcoin world. It's just, I want to buy them when it makes sense. And sometimes, obviously, I'm going to miss out on gains because something like altcoins don't make sense to me. And then like there's a narrative that actually does make sense and I just miss it. Happens all the time. But just generally speaking, like, I want the market to be a certain way. To be interested in altcoins. And if I miss like a couple 2x's, 3x's along the way, until that happens, I'm okay with it. I can live with it, because like if the conditions are really right, you can make much more than that. And you miss out on the 90% downside that almost all of these altcoins will have during that time as well. So, yeah.
Yeah, and just look at some of these weekly charts in USD and BTC terms, you know? It's like, it sounds like we're beating the same drum and dead horse or whatever, but like, nothing's changed, you know? It's the stuff is still bleeding, and market structure wise and inflows wise, that there's just no reason to assume otherwise. Although I do think an interesting dynamic that you sort of pointed out is that you use the phrase altcoin narratives that make sense. Part of the reason you want crypto market cap and the majors, especially BTC and ETH, to go up is because Bitcoin and ETH going up independently change the parameters for what qualifies as makes sense, right? So some altcoin narratives and market caps and FDVs and valuations and sectoral rotations or whatever, when the market is trading like shit, people are going to be very guarded and skeptical and cynical and critically thinking, whatever else. But if Bitcoin and ETH go up and alts go up and they're just a bunch of new inflows, and, you know, mobile coin, which used to be a thing, goes up a lot, then suddenly the absurdity of fridge coin is like marginally less absurd, right? so you can sort of start to justify more risky narratives if the rest of the market is supportive of risk appetite. So BTC and ETH going up sort of facilitate the type of reasoning that you need to somewhat intellectually justify slugging this shit, which is absurd if the market doesn't have that type of risk appetite. I don't know if that makes any sense whatsoever. But I guess the summary version is that, like, BTC and ETH going up sort of warp reality in terms of what makes sense altcoin-wise, and they sort of reduce the cynicism and increase risk-taking. And so altcoins and narratives and rotations, which in shit market conditions are absurd, in better market conditions, they're just as absurd, but not perceived as such, because everything else sort of, you know, the absurdity tide lifts all speculators' boats.
Well said.
So
I agree.
That's, you know, basically root for BTC and ETH, even if you don't trade them, I guess, is the summary version there.
Yep.
Should we do some news? Because, God help us, there's not much else.
Yeah, let's hit it.
Have we missed out on any scintillating price action? Not quite yet. No, I mean, the 1 minute, Don, is looking fairly, you know, optimistic.
Let's go. $1 at a time.
$1, one tick per tick, Don, tick per tick.
Yeah.
So on the news front, and again, I'm going to open it up professionally. dark theme, professional tab opening.
Oh, yeah. What has this show come
I know,
to?
it's unrecognizable. We're fully corporate now. Also, leave a like on these videos if you enjoy Casual Fridays. And apologies for missing Monday markets and Wednesday markets. I was unwell and Don was cowering from social media, which is obviously the correct answer there.
Which is actually the reason why I missed it is actually because on Twitter people usually add me and are like, Don streamed today, and I'm like, oh shit, it's Wednesday. And yesterday I didn't check Twitter because I don't. And then in the evening I was like, oh shit, it's Wednesday. So that might be a more regular occurrence, but I'll cover them again on the weekend or at some other date.
Even closer to the weekly close, we'll have a Don panic stream.
Yes, exactly.
To look at
it's
how
that
be great. That'll be fun.
Yeah, I'm down 5%. Like, oh no,
it's over. You went all in on that trade, and you took 10% of your position size on the 16K trade. You poor thing.
Of course.
So thanks for playing. The first news article is kind of a precursor, I guess, to a discussion, which is the Layer 1 project Initia emerges from stealth with a pre-seed investment from Binance Labs. So it's just another Layer 1. And I'm wondering whether you think the Layer 1 carousel narrative is one that's going to be a feature of the next bull market. Because up until now, that's been the sort of go-to play, right? It's like we have BTC and ETH, people start using them, especially ETH, because, the Bitcoin usage thing is a bit more tentative, to put it kindly. People start using ETH, it gets very expensive because scalability and layer 2s, etc. weren't there and arguably still aren't there. So transacting on the base layer becomes very expensive, and that makes it very easy for sort of layer 1 shills, marketers, etc. to make a case that, well, look at this big, bloated, technologically absurd, low TPS blockchain where you can't do anything and you're priced out. Hey, you new retail speculator, come over to our chain where the fees are a fraction of what ETH's base layer fees are, and you can do whatever economic transactions and smart contract interactions that you want on our chain, and it's so much better because it's cheaper, which is an argument that has many issues, right? It's a bit like Swiss cheese, to be honest. You have to ask, why is there no demand for block space? And maybe it's because there's nothing to do on your chain, but just ignoring that's been a sort of benchmark and feature of basically every market cycle we've had, that, oh lol, the old stuff is expensive, the new stuff is cheap, therefore the new stuff is better, right? And then what naturally happens is that thing pumps because it supposedly fixed something, or there's some sort of DeFi funding to do, or just straight up speculation that this is the BTC killer, it's the ETH killer, or whatever. So it goes through a relatively short period of outperformance relative to BTC, ETH, and it goes up in USD. And then the unlocks happen, and people realize it's a bit of a ghost chain, and the fifth clone comes up, and it basically dies and bleeds into irrelevance in BTC terms, ETH terms, and often in USD terms as well. Do you think this is going to happen again when market conditions pick up? Or are we smart enough, plus have scaled ETH somewhat sufficiently and better than before, that we won't fall for the same thing? Is the layer 1 carousel trade dead?
Did you just ask me if you're smart enough? Because we're clearly not. No, I think it's just going to happen again.
Oh, God.
I hate it. It frustrates me, but it's going to happen again. People are going to fall for it over and over and over and over again. I think this is basically like a feature of the crypto markets now. Basically, I mean, every time you have a hype cycle, you have new people, right, that you can put this on. And the thing is, it doesn't even require new people, because there's still people that, like, I saw a bunch of DOT fanboys, right, like being like, yeah, but it has the best, like the most active development, blah blah blah, chilling something that's down 95%, right? Like, it literally doesn't matter. There's always going to be people that just don't really care about facts and price. They only care about being right, as in, like, they backhold something and then they're excited in the bull market, and then maybe they pump enough money into it that it actually goes up again, and then you're going to get new idiots to buy it. I think it's never going to end, which is not great. I think a lot of this money is kind of siphoned out of the crypto space in general. Like, I kind of understand the crypto, like the Bitcoin maxis, to an extent, because a lot of money goes into the space and a lot of money kind of gets siphoned out of it by shady coins, shady whatever, like just people paying themselves, right? They launch a coin, They don't do anything with it. A bunch of retail buys into their coin, and then the team can buy their Lambos and their villas. It's kind of a shitty thing for the entire ecosystem, right? Because if it was actually pumped into something that is useful, you'd get somewhere. But if it keeps on kind of being drained by bad actors, doesn't really help crypto as a whole. So it's not great, but I think it's a feature now, and
Feature,
it's
not a
gonna
bug.
be a feature. Yeah.
Well, feature and a bug potentially. It makes for good trading because those kind of sectoral rotations, like you have a basket of L1s and you just ram those every time the market dips, and then you're up 8 to 15% the next day. You know, that makes for some really good short-term trading. But bigger picture, the main two issues I think you highlighted is one is it's net extractive, but arguably so is trading, so who cares type of thing. But the second one is that those it's very like those rotations are on borrowed time. Like longevity is one thing those trades don't have. And most of the certainly sort of newer retail participation usually piles in at the top of shitcoin/ETH pair, and then spend the rest of their crypto experience just bleeding out relative to ETH, BTC, and USD, but especially ETH, right? So it's like paradise for traders because like a new shiny thing, fewer bag holders, momentum, fresh chart, etc. But if your timing is wrong, the odds of you outperforming ETH are so bloody low. It's like DeFi 1.0, right? So it's like it's very difficult. I think it's like a bad investment, but a great trade a lot of the time.
Oh,
Probably
yeah.
how I'd classify it.
I think in general, like anyone that's investing in altcoins has a screw loose. Now, obviously, some of them make money at the end of the day, but I think that's mostly due to luck, in my opinion, anyway. Like, you cannot really, like, if there's not the right people pumping your coin, no matter how good it is, like, if it doesn't appreciate in value, and it's very, very, like, coins are not just appreciating in value because it is great at whatever it does. It's not how it works in crypto because almost none of these coins have any kind of proper cash flow. It's not like there's money earned. It's just speculation. So even if you have like this speculative great asset that you built or whatever, if not enough people come and trade it and kind of think it's great, it's not gonna go up as like in general. So you can be right on that this and that coin is better than the competition. It still doesn't have to mean anything. And then also like you're basically investing in something that isn't really yielding anything in the real world, or like even in the non-real world. These are just speculative kind of bets. So it's high risk investing, bordering on just gambling, in my opinion, on the investment front. But I could just
Thank
be
you,
coping because I'm a
DonAlt. Yeah.
yeah. I mean, I like to trade it, and I think as a trader, some of this stuff is actually really good to trade. As an investing person, I might just be too dumb. Maybe I don't get it, but from what I've seen, like even good projects don't have to make it, and oftentimes don't. It all depends on factors that you very rarely can control. You cannot really guess whether a team is going to dump on you or not, and even if it's like a good team, whether they have good money management skills and whatever, like it's very, very unlikely that you can kind of find that out by just digging into it. If anything, that's something that you're going to see while back holding, and then you're back holding and you're down 80%, and then you see that they're kind of mismanaging funds or doing dumb shit, and you're like, okay, I'm down 80%, might as well hold it. So I don't know. It's a pretty tough one, I think.
Well, it doesn't help that the teams are hamstrung, it feels like, to a large extent, because of two things. One is because of the fear of securities regulation enforcement. Even if you have a protocol that accrues a bunch of fees, turning on that fee switch is like a regulatory disaster and super high risk. So instead, you're left with like promises, and maybe down the line somewhere they'll turn it on, but you have to like speculate on that. And the second issue is that historically, teams that actually ship stuff and build stuff, they get dumped relentlessly because it's such a speculator driven market that the market is very willing to see that as a buy the rumor, sell the news thing. And it's much better to keep hyping up future launches, future developments, future announcements, keep speculation going on future airdrops, future distributions, turning on the fee switch in the future, and just basically pushing the timeline forward. Those projects tend to do better than those who just straight up say, here's what we're doing, here's what we're not doing, and this is what we're shipping. There's almost like a Ponzi-nomics layer to it that you have to be able to play properly at the expense of proper development if you want your token price to do well. And that's, again, there are structural obstacles like the fee switches and the useless governance tokens and the threat of securities enforcement. It's a fucking nightmare, man.
Yeah, I mean, it's something that, I mean, a lot of people listening to this might have already noticed is that whenever Bitcoin bounces, you suddenly get like awkward announcements, right? And the reason why they do this is basically they wait till the market turns around to put out their announcement so they get a pump. And if you think about that, it's just kind of like, that's not how this is supposed to go, right? Like if you're just building something useful, you should be building it, putting it out, whatever. You shouldn't be necessarily be like, oh, but we need the Bitcoin market to be doing well. Otherwise, we're wasting an announcement that could pump the price. Like that just seems very scummy, but that's the landscape. And if you don't do it, like Cred said, then you're kind of shooting yourself in the foot because everyone else is doing it.
Yeah.
And then, like I said, you can have the best protocol. If you cannot pump it, it's going to disappear one day.
Yes, but consider this. I would actually be for crypto projects sort of partnering with trading influencers if they explicitly hired them to help them time announcements of bullish developments. Because at least at that point, you can sort of make a case that the influencer has some relevant expertise and the team is using them for something within their wheelhouse, which is already far better than getting sort of outright trader type accounts and having them partner with projects for no discernible reason. So at least you'd be able to provide a rationale that, yes, I've partnered with X token. My primary job is to look at the charts and help them time announcements. Like, I think that'd be pretty sick, don't you think?
Yes. But
at least it'd be far more honest than whatever we have at the moment.
But people also don't like, people in crypto don't like honesty for some reason. They like it when they're being obviously lied to. It's something I've noticed. Like, this wouldn't fly that well, but if they would kind of like get it around the bush, they'd be like, oh shit, yeah, this team is smart. But if you say like, hey, I'm just timing this stuff for them, then they'd be like, oh, how scummy. It's so odd. Like,
it's true, it's weird. I think people also love fake honesty, if that makes sense. Not deception per se, but I guess not conveying the whole truth or a white lie of sorts. So for example, let's say you took a trade and you ate shit. You know, like in reality, you took it and then just moved against you immediately and stopped you out and slipped you and you got completely murdered. And then you'd posted that analysis or that trade on Twitter. And when you update it, you're like, yeah, I took a small loss, or, oh, I got out break even. And then you post some philosophical tripe about how risk management is important and how transparent you are about showing your losers and how trading is about a large sample size. People lap that shit up, you know? It's like in reality, you got completely fucking bulldozed and carried out, and maybe even tried to take the trade 2 or 3 times before that. But as long as you inject enough like fake humility into it, people seem to respond really well to that as well. So there's some social media alpha for you, I guess. Shit. That's it for the layer 1 stuff. Next article is new tattoo machine can ink your arm with an NFT, allowing artists to collect royalties. Interesting. Again, I wanted to use this as a precursor for broader discussion. What do you think the future looks like for NFTs from a speculative point of view? Because I feel like there are 2 strong considerations here. The first is just how large the cultural impact of NFTs was, and the moat they created for getting into crypto or becoming crypto adjacent was probably the most successful one we've had, bar none. But then to counterbalance that, the amount of like public hatred and vitriol for NFTs is also like enormous, and they're also mega wrecked, sort of beyond 2017 to 2018 correction wrecked, like fully destroyed. And so those 2 things are really kind of hard to reconcile. Where do you fall on? I mean, are NFTs going to come back? Are they going to come back in the same form? Was it a one-off fad and we're going to pivot into social-fi and fucking friend tech, Star Arena type of thing? It's just very hard to dismiss something that was this culturally impactful. But then you sort of look at the wasteland that's left, and it sort of makes you doubt the first premise. How do you sort of wrestle with those two?
No, I think NFTs are gonna be a thing. Yeah, I just don't know in what form. And I think in general, like this whole like the same with like the story with the tattoo thing, like it just seems so dumb to me. Like the fuck, how does that make any sense? But then again, like I'm not really built smart enough for these kind of discussions, right? Like for me, I'm just looking at the prices and how it's been behaving. I mean, Bored Apes are still at 25 ETH. That's like $40,000. That's actually not that bad, right? Considering there's 10,000 of them. It's pretty decent market cap. It's been a pretty brutal bear market, but it doesn't seem that bad.
I mean, hackers are holding half the supply as well, so that's pretty bullish.
It's true. But yeah, I think the NFTs are going to be a thing. It's just in a different kind of form, and the different kind of form, I think, I just don't know. Like it's always so hard to predict these kind of things. Like it's pretty obvious to me, just given how they traded the NFTs, like how they got people on board. That's going to happen again. It's just, is that going to be the Bored Apes again, for example? I don't know. I don't think so. Is that it's going to be a new thing that I cannot make up because other people are much more creative than me. And that's going to take off, and then you move from there. For example, like something that makes a lot of sense to me is like NFTing in-game items, right? That'd be kind of cool. Even cross kind of games, you could make a lot out of that, like in gaming, just in general, like combine gaming and NFTs. If someone does that well, could see that kind of take off. But yeah, it just depends. But I think in general, like counting out NFTs as a whole is still a bit premature, and even saying like the entire NFT market is dead. I mean, volume wise, most definitely, but price wise, there's actually still quite high. Like if Bored Apes dropped to 10 ETH, maybe I'd buy one again. But
Again,
I'd rather not. Actually, I find them hilarious.
you'd be buying punks instead if that was the repricing.
That's something that actually I've been eyeing, and the punks have been holding up really, really well.
Come on, listen, Don. This is your Ethereum arc, where you buy the ETH BTC range low, you buy the ETH USD spike, and you buy punks, and then underperform the ETF announcement. That has to be it.
It could be.
There's like a bittersweet victory, you know. Like, surely you'll take that at this point over a shitty weekly close.
I mean, sounds better. Yeah.
Sounds better, yeah. I also think maybe NFTs next time around will be slightly less insane in terms of pricing, because a lot of the pricing was not real in the sense that the floor price is resistance. And sort of if you had like a rare mid, you know, in the middle of a collection, mid rarity type of NFT, realistically, you had no idea how much you could sell that for, right? Especially if like the volume dies down and the only trading activity is around the floor. If you have like one of those mid rarity pieces and you're looking at where the other listings are and coming to inferences from that, that's a really bad idea of how much, you know, whatever fair value is for that thing, right? Whereas now we have Blur, we have Tensor, we have a bunch of other stuff that sort of incentivizes more of a trader mindset and more efficient price discovery. Maybe that will kill some of the speculative elements of it, or at least dampen the volatility. I also think it might act as a bit of a barrier to entry for newer people, where the sort of bench, you know, the method of speculation is more sophisticated than it was in the past. But maybe you'll just get more efficient price discovery that way, which isn't like the worst thing in the world. This is like another one of those where I go back and forth. Where do we just keep this as fun, meme art stuff? Or do we basically do what we always do and turn it into a form of perpetual swap trading? And it seems like the crypto tendency is always towards the latter. But I just hope that we don't take it too far in terms of NFTs become straight up, you know, altcoins with pictures, as Kobe's called them, because then I feel like we'd sacrifice a large amount of the moat that got people interested in the first place, because it was like fun, community, new, etc. If you sort of want to join, and it's like a perp style PvP immediately, I think it's going to put a lot of people off. So I should probably trade there though, man. Like some of these logs I see of how NFT people trade, like even just the basic OpenSea transaction history and even the on-chain snapshots of people like trading low caps and stuff. I really need to better set up my infrastructure to punt up against those people, even for fun. Because if you're looking for like a less sophisticated arena with a different caliber, if you will, of market participants, it seems like there's a lot of struggling fledgling traders on chain, because technically the most liquid, most highly traded stuff is going to be the most competitive and most efficient, right? Because there are no size constraints to the firms and whoever else that comes in to arbor the thing and trade it, whatever else. Like BTC and ETH are hard, like on average and objectively speaking, compared to where participants, those sophisticated participants are size constrained when it comes to on-chain NFTs, etc. So you're kind of picking an easier level, if you will. And this sort of circles all the way back to our point from many shows ago, which is that if you are the kind of smaller account, newer, who's not size constrained and is just looking for edge and alpha, trying to like market make BTC USD on Binance, probably like a really bad idea. Trying to pump the SocialFi on-chain memes, gems, NFTs, whatever, probably much better odds just in terms of your level selection.
I agree. I mean, it's just you go where. Then again, like right now with the NFTs, the problem is that you basically pay a shitload of fees.
Yes. The cost of trading there is. Ugh.
Yeah, but it's the same with SocialFi. Really, like getting in and out costs you like 10% or something. I wouldn't know. I have never sold anyone. I've just only been buying, just for fun. But yeah, I still think those are the places where you can find some very obvious edge, right? You, for example, like with the whole something that I saw a bunch on Friendtech was that people like initially it got hyped and then it died down and then it got hyped again. And during the first hype cycle, people would get on the platform and be like, oh, when it died down, they were like, nah, I'm leaving, right? Something that I saw quite a bit. So their prices tanked, obviously. And then the second hype cycle comes around and you kind of know how these people work, right? You can 100% guess what they're going to do just because you've seen them on Twitter for a couple of months, couple of years, where if something's hyped, they're just going to come back.
Oh, it's so hard not to name names right now, isn't it?
Yeah. But I mean, that's just how it goes, right? And there was a lot of crypto Twitter folk that did this, where you can just be like, okay, I can see the hype coming back. They're going to be the first ones to jump back on. And then you saw like 10x's on those, which I find quite funny. Like, why would you be buying them back if they're that like going in and out of something that quickly? But still, like, that's money that you can make, which is relatively, especially on the bonding curve when they've already dumped on you, right? There's some fun to be had there. If it would have been worthwhile, I would have done it for me. But like that's sub 1 ETH kind of trades, or maybe like 1 or 2 or 3 ETH, and then you can take advantage of that. But that kind of stuff, it's like obvious, easy pickings. That a lot of like just bigger guys that kind of understand how trading works and how you can kind of easy pick stuff might actually not bother for, right? Like it's just too much work, or just in general they're not there yet. And then yeah, you can take advantage of that. And that's the kind of stuff that I think when you have like a really small account that is just trying to multiply it at the start, right? Like let's say you start with 0. whatever ETH, and that's what I would have done in that position. I would look for these kind of opportunities for the early multiplier, like bust or multiplier. But even it's not really even bust in this case because it's a bonding curve. You can exactly see who's holding what, and if someone's already dumping and the panic's already far gone, right? As in it's been a week or something. There's a good chance that other people that are holding the same thing are not going to dump on you, and then you have pretty good risk to reward kind of trade setup there. That's obviously in hindsight, but it's something that I saw back then, something that I even wrote about, I think on Friendtech. I don't know. I don't remember. Anyway.
Your content gatekeeping us, Don.
Yeah, but I mean, I'm not gonna write that on fucking Twitter. Like that's exactly like if I wrote that on Twitter, it's like it defeats the entire purpose, right? As in like that just doesn't work. If more than 1 or 2 people do this, it's not gonna work. But this is exactly the kind of edge that you can find if you're so inclined. If you're not just want to be lazy trading with leverage, which I think is fair enough as well. You can just trade with,
and they have different trade-offs, right? Like every time we bring up this topic of picking a different arena, there's always a reasonable counter argument in the comments, which is like, yeah, but the smart contract risk and the rug risk is higher if you're doing on-chain stuff and, all the asymmetries of the team dumping on you and so on and so forth. I think a lot of that can be mitigated if you're on-chain sleuthy enough. But in general, yeah, it's like higher risk, higher reward. That's the whole point, right?
Yes.
It's like higher risk, higher reward. The risk is just different in terms of you're not really going to be worried about Satoshi dumping his coins when you're trading BTC USD perpetuals. But the reward is also completely different. Like you're not going to 10x by getting one pick right, scanning through the Woo watch list or whatever. So
no, and I think in general, like the risk of ruin if you trade high leverage, right? Like let's say you're trading 1 ETH and you're just like, I just want to get to 100 ETH. I don't care if I lose this 1 ETH. I'm just gonna level up 10, 15, 20x. I would give it a 99.99999% chance that you're just gonna lose that ETH, and then you're gonna redeposit it and do it again, right? And I think if you kind of go somewhere else and take the contract risk, I think the chances of you just losing that ETH without even turning it into anything is significantly lower when you just kind of don't go the leverage route. Now, if you have 1 ETH and you're like, I want to learn how to trade, I want to do this properly. So once I have 100 ETH, I know actually how to trade and can do something with it. That's a different story, right? Because then you can do like the whole bigger time frame, or like in general just like lower leverage trading. You work your way slowly up or down, whatever, and then you have a little bit of trading expertise, right? And that I'm totally on board with. But if you're going the high leverage route, there's a good chance, like there's almost a guarantee that you're going to lose everything. Whereas if you kind of go the on-chain kind of like, or the in general like a little bit further out there things, if you go that route, there's less of a chance that you just lose it without gaining anything. And I don't think you learn how to trade by trading like 100x leverage. Like that's just not how it works. So even if you hit it, like even if you hit your one trade and you get ginormously lucky, the chances of you giving it all back is like almost 100% again. So
great odds. Although to be fair, Don, you might not learn how to trade efficiently by punting 100x, but if you're trying to become a master in pissing and shitting in a bucket, then I think there's no better way than 100x yes. trading to
if you want hemorrhoids and stress.
Yeah, if you want like a nicotine, caffeine addiction and to ostracize your family and loved ones, there are very few things that we can recommend more. Not that we recommend leverage trading. Also, I feel like now is a particularly bad time to really get into it because vols are so stuffed. If you most of your sort of risk management principles and the average position sizing that you're getting used to and the types of moves that you subconsciously and implicitly become used to as well are these like couple of times a week, 2 to 5% rotations, and you size up according to that. God forbid there's a regime change. You're going to get carried out in your first week when the market moves like 10% 3 times in both directions in one day. Yep. It feels like a really bad time to build your leverage intuition, which sounds like a made-up term, but I think you know exactly what I mean when I say that, right? You kind of roughly know your position sizes, you have a rough idea of, the daily range, that type of stuff. I feel like now would be a pretty bad time to do it, because if market conditions persist, maybe that's worthwhile, but as soon as they change, vol is gonna, like, again, anecdotally, 2, 3, 5, 10x, depending on how it's measured, and the number of rotations goes up, the size of those rotations goes up, the amount of weird, janky mispricings that happen also goes up. The amount of assets that you're trading, because altcoins aren't dead anymore, also goes up. And if you don't factor that into your risk equation, then you're fucked. Like there's so much just... It's a full regime change, straight up. And so if you carry your low vol single asset intuition into those environments with high leverage trading, you're going to get completely blown the fuck out. And I think that's another sort of indirect argument for, or at least exemplifies bear market PTSD, because you basically build intuitions that don't scale at all and are actually harmful when the market should be at its most fruitful and profitable. So, all stuff worth bearing in mind. Salsa Tequila used to have really good tweets about this. I'm sure you recall when price would nuke or vol would really pick up, he'd be like, hey, by the way, heads up, especially if you're trading inverse contracts. He's like, your normal position sizes are not normal position sizes anymore because the whole thing's been repriced. The good old days. Ether could reach $8,000 by end of 2026, says Standard Chartered Bank. And there was a better bit within this. The expected $8,000 mark for ETH is viewed as an initial step on the road towards the bank's previously stated long-term structural valuation range of 26,000 to 35,000.
Cool.
Dude, I wish I could get one of these cushy jobs at a bank or something. I mean, if you're cynical, your comment is lol, you do this now anyway, Cred, just without, the title and expertise of just, picking prices and making stuff up. But I just wish I had that kind of comfort of working for this institution. And they're like, hey, what have you been working on this week? It's like, oh, ETH is going to 50x. And I'm like, oh, okay, you're a very serious person, And as long as you give it very fancy and credible titles like long-term structural valuation, which as far as I'm concerned is a word salad, you can get away with arriving at any conclusion that you like. It's really shocking to me how people come up with this stuff. And the methodology is it doesn't matter at the end of the day, right? Because the thing about crypto is a lot of the supply dynamics are known, and it's entirely sort of demand based. You could even argue the supply is naturally skewed on the bearish side because all this stuff is inflationary and whatever else, and the only variable that really matters is the demand part of the equation. And so, stock to flow and, minor break-even costs, and people are really desperate to try to have a valuation framework for crypto assets. And, they look at network effects, all sorts of stuff. And, credit to them for trying to clasp onto something tangible as they're, falling down a well. That's the mental image I get. But at the end of the day, I think it's almost better if you just surrender and think, okay, well, this market, because of what it is, these weird assets, and they're not really securities, and even if they are cash producing, we can't share that. Instead, we have these weird proxy governance tokens, and it's not clear what those do. And the demand is so cyclical and so correlated with a bunch of other stuff. I don't know. So instead of trying to value this thing in some sort of neat, organized framework, I'm going to surrender to the chaos and just assume that nothing matters. There is no ceiling, there is no floor, and there is only sort of momentum and liquidity. And I'm just going to go with that. I just feel like that'll get you closer to the truth on average, and it's a better framework than desperately, despite many years of failure, trying to bring your TradFi suit-esque mind to this asset class. And you and I know from private conversations and data we've been privy to that a lot of these suit fund managers who kind of joined crypto at the top, or even if it wasn't at the top, those from TradFi backgrounds, dude, they're dumb as fuck a lot of the time.
Oh, yeah.
Straight up, they tend to be some of the worst asset managers who desperately cling on to their frameworks from the past and try to just transplant it to crypto. So there's my message there. Embrace the chaos, embrace the uncertainty. The speculator's toolkit, on average, is going to be more helpful. I think at the extremes, you can look at the fundamental stuff, and even then really zoomed out things like, maybe market caps and FDVs relative to each other, or market cap of, crypto compared to gold, or, oh, we just lost Apple's, relative to Apple. Stuff like that can kind of be okay. Crypto, frameworks within crypto can be quite cool. It reached the top 100 market cap, or it reached the top 50 market cap. That to me can be a bit more logically consistent. But anything that gets too complicated or TradFi-esque, I just think does not have a particularly good history of providing good alpha or signal for valuing these things.
I agree. I mean, it's just useless. If you think ETH is going to 10,000, then just fucking buy it and shut up about it.
Yeah, especially if you think it's going to 36,000.
Yeah, I mean, what the fuck?
It doesn't matter. Even if ETH goes down 50% from here, if that's your target, it makes zero fucking difference, right?
Yes. I mean, you're like the richest bank on the planet at that point, if you actually truly take on these positions too. I mean, what the fuck are you even talking about?
Oh god,
I don't know. Whenever I see this, your target is 10x above current price, then I mean, cool. But how do you get there? I'm always surprised.
And why aren't you all in? Yeah, it's
whoever made that has to be all in, and then levered their grandparents' money on top of it, because if you're not, that's just a joke article. You cannot have a target of 10,000 and not be all in. In my opinion.
This is from Jeffrey Kendrick, head of Forex and crypto research at Standard Chartered Bank.
I mean, obviously, the counter argument is okay, you don't have to be all in, because if it goes to 36,000, you're gonna be rich even with a little bit. Which fair enough, I can live with, but still, it's still fucking dumb. These kind of targets, just, I mean, yeah, If you have these targets, just buy the thing, close the chart, put your sell order at 36,000 per ETH, and then just never look at it again. Like, why bother?
To me, I give this the same sort of intellectual credibility as I do those monthly time frame Elliott wave projections. All these weird logarithmic curving Fibonacci spiral trend lines. To me, this is just in the realm of fantasy and science fiction. Despite
that's probably how they got there.
Yeah, probably. A lot of the time, I wouldn't be surprised. Like, I remember there's this like Gann bearish bat thing. It's like, well, we're so detached from reality that at this point, it doesn't really matter how you arrive at those types of conclusions. Yep. So yeah, that's helpful, at least. I see myself.
Someone is bullish.
At least someone's bullish. On ETH, no less. This is based, and this came out at the ETH BTC range low. Fucking send it, standard chartered. The sad part is, Don, I can definitely see a future where I'm like, I don't know, in my 30s somewhere, maybe in my 40s, being like, oh yeah, 26,000 support on ETH has been reclaimed. The midpoint is at 28 or whatever, and then, oh god, I think something's gone terribly wrong in my life if I'm still doing that. The scary part is I can see it. Monday markets when I'm in the retirement home.
That sounds
stay
fun.
tuned.
I'd watch it.
Thanks, from your castle. Yeah. Oh, I know this guy. Binance's 1 billion crypto recovery fund deployed less than 30 million, according to Bloomberg. So Binance's post-FTX industry recovery initiative raised over 1 billion, but has deployed less than 30 million so far, according to Bloomberg. Despite big-name backers, the crypto sector continued to struggle for investment this year, with many firms cutting jobs to survive. And it just names a bunch of the firms that contributed to this recovery fund: Jump Crypto, DWF, Animoca, Aptos, GSR, Kronos, Booker Group, Polygon, etc. Added a further 70 million. And obviously the standout thing is that a very, very small fraction of the full amount has been deployed. I saw this kind of thrown around as FUD or whatever else. So they're using the funds for something else. That claim isn't particularly clear to me. I haven't seen good evidence for it. I think the fact that crypto venture funding is as low as it is for good reason. Like, it's not for nothing. If you look at the regulatory landscape and the reputational landscape and everything else, I'm not surprised that people aren't deploying as heavily. Now, obviously, the people deploying now arguably stand to gain more, right? If they're being super counter-cyclical. But on average, I can understand the why you'd want to be reserved around it. I actually don't think this is a particularly bad thing. Like, it's their money, right? Like, there's this recovery fund, and it's supposed to be used presumably for good projects and good opportunities, or where it's necessary. And if the entire space is just being repriced and deflating, and there's nothing that's distressed or significantly mispriced, I would actually find it more disturbing if they just started like arbitrarily deploying these funds at key BNB support levels, like getting into that whole type of thing. That would be more concerning to me than just not treating this with any urgency and instead being discretionary about it. Like, the fact that they're not rushing to deploy this actually, I think, is better than the alternative.
I agree. I mean, what the fuck would they have done with it? Like, I don't know.
More launch pads, Don. Have you seen BNB?
Dude, yeah. BNB actually looks horrendous still.
Yeah. Oh god. Yeah. That's. I don't know, man.
Not great.
Has that closed below? Oh, that weekly close would be so bad, I think. Yeah. Well, not necessarily. It did close below it, like on the 18th, the week of the 18th, and launch padded its way out. But this is it's so stair-steppy, like on the weekly time frame. This is I don't like it.
No,
does this scare you, Don?
No, for some reason it doesn't. I'm just like, whatever, fuck it.
Based,
if it dies, it dies. No, I mean, if Binance has troubles and this actually nukes, we have bigger problems anyway. So I don't know. It's been chilling around this low for so long that I've been getting complacent, which is probably not a good sign. But I'm just like, I mean, it's closed below. It didn't do anything. Maybe it's just gonna just bleed like every other altcoin has, instead of just completely nuking the market, which is a possibility, right? When you think about it, you can lose this range and just bleed for the next 10 years.
Did you say 10 years?
I mean, it's a useless coin. It's either security or it's useless. That's kind of the whole.
Listen, Binance Smart Chain is a hub of innovative economic activity, Don. How fucking dare you?
Yeah, maybe I just don't understand it,
You
but in my
clearly
eyes,
don't.
it's either it's a security or it's useless. And then why the fuck would it not bleed for 10 years? Even if Binance sticks around, like.
Oh, because people will trade it as a Binance proxy coin, right? That's kind of the whole. Whether they're justified in doing so on fundamental terms, which at this point is pretty hard to do because they tried to pivot away from it and they pivoted away from burning it and tried to make it as unsecurity-like as possible. But I don't think that changes the fact that if speculation comes back and whatever else, people are going to think, oh, I see Binance everywhere. Oh, they've got a token. Put those two things together. That's a good token.
I mean, I wouldn't think that it only goes down, but I think, like, for example, like the Dogecoin chart, where you have a few bigger pumps, but they fully retrace. Like, I could see that happen too. I mean, that's in my mind the best case. Like, this thing just deflates, but very slowly. Worst case is obviously it goes down and we're all fucked, which is a possibility that I don't give it too much weight, but I think it is quite real. So.
That said, Don, I prepared for this eventuality, and we're not going to end on a FUD note. I've got more copium for you.
Hit it.
This is from James Seifert from Bloomberg. He says, today is the deadline for the SEC to apply for an en-banc hearing, basically an appeal of sorts, in the Grayscale GBTC case. Will the SEC file for one? And there's a poll saying yes, no, and I don't know, show results. So we're going to hear something on that front today. I think if they appeal, then that's kicking the can down the road as far as the Grayscale suit goes. Now, that doesn't change the deadlines with the spot ETFs. Those two things are happening at the same time. So it wouldn't be a deciding factor by any means. But that would be interesting. If they don't appeal, I'm less sure procedurally what that means. Because I think then they have to come up with... They basically have to revisit the... I think they have to revisit the application to convert to an ETF. So that would be telling as well. But also there was some recent chatter from the Bloomberg guys about how the SEC is going back and forth with issuers and ironing out the details as far as disclosures and other stuff. And that's like not... I mean, we're reading tea leaves here, right? But it's not like a terrible sign as far as if they were going to blanket reject everything. Maybe there's a lower probability that they would bother going through all these disclosure things. Yeah, we're getting like some noise, if you will, on the ETF side. I think we'll certainly know by the end of the year if we're getting one. I don't know exactly how many sort of opportunities to delay or kick the can down the road are left as far as the spot ETF deadlines, but you can kind of feel the pressure converging, right? Like this Grayscale case, they've already delayed the spot ETFs on a couple of occasions, and they're sort of running out of bandwidth before the market can finally know whether we're going to get this damn thing or not. And I'm looking forward to it, actually, because even, from a price action point of view and anything else, even from a narrative trading discussion point of view, I feel I've got ETF fatigue at this point, Don. I'm really tired of hearing about it, and I want to move on to something else. I want to sort of open the path to maybe gamble on ETH or do some other stuff. Hopefully it comes off the back of a positive resolution, and we've made our arguments for that before, not just from a price-based perspective, but just in terms of investor protections and offering an actual good product and not shoehorning people into GBTC and futures ETFs that suck. But it'd be quite nice, I think, as a backdrop for this year, as shitty as it's been, to get this good product and hopefully the decent price action that comes with it. That said, a denial would be pretty bad for the aforementioned reasons, but from a trading point of view, that would be maybe even more interesting than approval, Don, although that's maybe a hot take.
Yeah. No, I think so. Like, if a denial takes it to 20K, I mean, I'm gonna back up the truck, and this is something that I rarely do. Like, I'd be more than down to buy a shitload, more than I usually would. Now I don't think that's very likely, but I'd be actually down for it. Would be cool.
Would be cool. Bitcoin bull wants ETF denial. That's the headline, or the title for the video, rather.
I think it'd be such a dumb move, and I don't know. It just seems a fun event that you'd want to buy.
Yeah, especially if the magnitude of the move is what I would expect. Like, scary. The types of weekly candles that stand out at you even in the future when you look at the chart. Like, probably be at least in that neighborhood.
Yeah.
And that's funny because, like, I think it takes us all the way back full circle to the original point you made that, hey, not much has happened yet. from price action perspective. I think we're just desensitized to it. Because if the range is like 1 or 2%, or 1 to 3% or whatever, and then the market moves 4 or 5%, that seems like a big move, right? But if you and I were at our desks when, if BitMEX weren't unplugged, we would have gone to 0. I think the bar is a bit different in terms of what constitutes like a big scary move. So shout out to the 1 minute time frame volatility adjusters. I hope you are okay. And yeah, when the regime changes, things get scary from a vol point of view. And that's not just like a random dunk, oh, I've been through this, you haven't. I genuinely mean one of the more useful things you can do is to make sure that you're not married to your expectation of volatility and to the position sizes that come with it when trading futures, because that stuff changes very quickly. And if you're late adapting to it, you can literally... How many times have we seen people blow up their entire trading accounts at the start of a bull market? I've seen it endless times, right? Like you have these like mean reversion scalpers who are used to like BTC and ETH and maybe some alts, and then the weekly trend setting candle is their gravestone. So don't be that person in any case, be it upside, downside, or downside, as he'll discuss tomorrow or on Sunday on his catch up stream. But that's all from us. Hope you enjoyed this episode of Casual Friday. If you did, leave a like on the video, leave a comment. Thank you for all your comments. I reply to all of them while Don ostracizes and exiles himself from social media. But you'll hear from him this weekend. And thank you for watching.
Bye.